Welcome back to Retirement Solutions for All Ages. I'm Ruth, and today's episode is a bit of a homecoming for me. You see, my family history with Naples goes way back to 1982 when my parents and siblings first made the move. Then I spent most of my adult life in the freezing winters up north, the Chicago suburbs, and the suffocating heat of summers. Then, like many people, I retired to Florida. I spent nearly a decade living on Marco Island, which I loved, but my husband missed trees and felt the need to move halfway back to Asheville, North Carolina. We recently made the decision to return to Naples as snowbirds. Here was my dilemma. I'm frugal by nature. I wanted that under $500,000 price point and low HOAs. My mom still lives happily in Pelican Bay. But if you know Pelican Bay, you know you're paying for nature. The mangroves, the private beach trams, the boardwalks. It's a business class lifestyle. I realized that while I'm too old for coach or carnival cruises, I also didn't want a mandatory food fee lifestyle like my sister has in Wild Blue in the new construction development in Estero, Florida. I ended up finding my middle ground in Verona Walk. It's physically halfway between my friends on Marco and my mom in Pelican Bay. What I love about it and what confuses some people is that it's not a 55 plus community, but it has every amenity you'd want: pickleball, bunco, a beautiful town center, two pools, and even its own gas station. You get the luxury of a restaurant on site without being forced into a monthly spending minimum. But choosing the community and house was only step one. Step two, for most people, is the big question. Do I pay cash or do I finance? Oddly enough, the answer is both. You want to make a cash offer, but financing another way. We will get to that in a moment. First, let's look at the pros and cons of cash versus financing. Let's say you found your Verona Walk. You've found the pickleball courts, the combination of community and nature, and the perfect lanai. Now we have to talk about the money. Let's look at the all cash offer first. Pro number one, winning the bid. In a competitive market like Naples, cash is the ultimate leverage. It's clean, no appraisal contingencies, no bank delays. It tells the seller, I am a sure thing, and it often lets you close in as little as 2 weeks. Pro number two, zero monthly mortgage payments. For my fellow frugal retirees, there is a psychological high to having no mortgage. You eliminate that monthly debt, which makes your fixed income feel much more flexible. But, and this is a big but, we have to look at the downside. The con, the liquidity trap. This is where I see people get stuck. If you put $500,000 into the walls of your house, that money is no longer working for you. If a once in a lifetime luxury cruise comes up, or heaven forbid, a medical expense isn't covered, you can't just peel a shingle off the roof to pay for it. Your wealth is dead equity. The financing alternative. Let's pivot to traditional financing. This is where I usually put on my expert hat. Pro number one, arbitrage. If you keep your $500,000 in the market and it's earning 8% or 9%, but your mortgage is only costing you, hypothetically, 6%, you are technically making money on the bank's dime. You keep your liquidity, your money stays in your control. Pro number two, tax strategy. Depending on your situation, mortgage interest can still be a deduction. It's one of the last few gifts the tax code gives us. I'm not an accountant. Please consult one for tax advice. But what a lot of people don't take into account is the HOA factor. In communities like mine, my mom's or my sister's, HOA fees are based on a variety of factors. The more you get, the higher the fee. But when a lender looks at you, they don't see lifestyle amenities. They see a debt. A $250 or $1,000 HOA fee can actually disqualify you from the loan you want because it eats into your debt to income ratio. The secret third option. I told you at the start that the answer is both. You want to make a cash offer, but finance another way. How do we do that? One option, if you're planning on being a snowbird and your primary home is paid in full, you get a home equity line of credit to pay for the second home in cash. Guess what? You still own a home free and clear. It's just your second home that's paid off, not your primary. Another option, if this is going to be your new primary home, is buy before you sell or a bridge loan. Again, we are using the equity in your primary home to purchase your new home, and that bridge is paid off when you sell your old home. A third option is the true cash offer. We use your liquid assets to show the seller you have the funds. We win the bid. We get the keys to your Verona Walk, Pelican Bay, or Wild Blue. Then step 2 is the delayed financing maneuver. Did you know that within the first 6 months of buying a home for cash, you can actually take your money back out through a specific mortgage program? It allows you to maintain your cash is king status at the closing table. But 30 days later, you get 400,000 or 2 million or whatever 80% of the purchase price was back into your investment account to keep that liquidity. There is an in-between option. You finance the property but don't have mortgage payments. It's the HECM for purchase or a home equity conversion mortgage or a senior retirement advantage mortgage. As a retirement mortgage expert, this is my favorite tool. If you are 62 or older, you can put roughly 60% down and no longer make mandatory monthly mortgage payments. You keep most of your cash in the bank or markets, you have no monthly bill, and you still get the business class lifestyle. Retirement isn't about being cheap. It's about being smart so you can afford to be a little fancy when it matters. Whether it's the nature in Pelican Bay or the bunco night in Verona Walk, make sure your money is serving you, not the other way around. If you want to see the math on how delayed financing or an senior retirement advantage mortgage would look for your specific move to Florida, reach out to me. I'm your host, Ruth, the retirement mortgage expert. You can reach me directly by phone at 828-888-LOAN. That's 828-888-LOAN. Thanks for joining me on Retirement Solutions for All Ages. If this episode sparked new insights for you, please leave us a review, share it with a friend who might be looking to fly south for the winter, and hit that subscribe button so you don't miss future insights. Thanks for joining me on Retirement Solutions for All Ages.